Hey guys, this is Vic from Grasping the Market. Welcome to our morning briefing. It is Thursday, May 2nd, 6:20 a.m. So let's get cracking. On the longer time frame, the May bar opened at new highs, and while the low of last week has not been challenged yet, we can still say that both time frames are pointing up. Uh, as I've been saying for a while now, I believe that the market is being driven by short-term money, very technical driven, time frame traders. And there's an interesting thing that I just noticed. Like if you take every week range, like from high to low, you see that the 50% retracement or the halfback is always tested the following week before advancing up. You see that here, then following week you take low to high, you see it here, then the following week you take low to high. This was last week, and you can see yesterday that the sell-off stopped right there. So that tells me that people driving this market is very, very, very focused on these technical levels. And normally what I've seen is that smart money, big institutions, they don't care about that. When they need to load positions, unload positions, they just do it, and they have a lot of volume to go through these references. So we keep an eye on that. On the daily, we see for the first time signs of change. Well, not for the first time, but an important sign of change in the form of an outside day. Last time we saw an outside day was a couple of weeks ago. And what happened then is that we couldn't find a follow-through acceptance below the 2900 after that outside day, which led the market to ramp back up. Now the question is, what's going to happen after yesterday's strong move to the downside? Is it going to be continuation, or is it going to stay there for a while balancing? So that's will be our short-term focus. Sorry. Zooming into the market profile, we see an early session yesterday marked with caution. Sorry, let me move this. An early session marked with caution ahead of the high risk event, as it was expected, and then I'm not signaling major change versus Tuesday's close, because remember we had a spike and we had the upward distribution. There was not much change in the morning. One important clue of market weakness was seen on the E period when it failed to approach the overnight high. Here we had a rotation back down, it built some acceptance, and then the market found nothing below this and tried to go back up. If you remember correctly, the overnight activity, which I don't have here, but yeah, here, the overnight activity was done all the way up to the all-time high, and it was very telling that the E push up couldn't make it up there, especially having a prominent POC. That was the first time we had an important clue of weakness in the market. However, you were expecting the market to be hesitant before the FOMC, and that's what happened. We rotated back down and we established value in this area, which was consistent with the earlier session close. Then the FOMC statement was initially taken positively by the market. We started ramping up, and then further weakness was disclosed by the failure of taking again exactly the E high. We went there, we tried several times. I remember I was watching very closely, and I noticed that every time we went back up, it tried to like come back, trying to find additional buyers that never came. At that point, I said, "Oh, the market, it's not strong," because at that point, you had a 8 wide, 9 wide point of control. If you're breaking to the upside away from that established value, you need to move really harsh. Like you need to just go, and you cannot be hesitant. When I saw that hesitation, that was a potential clue of what could happen later. So during the press conference, we saw aggressive liquidation joined by what it seems like additional selling after the Fed suggested slim chances of a rate cut as the market had priced in. So then the market dropped all the way down. People liquidated. Some people started selling, and we completed that outside day. Uh, we left, however, at the top an incomplete auction. And this incomplete auction, plus the fact that the all-time highs were made on the overnight, are two rare occurrences that together I think are relevant enough to alert us of unfinished business to the upside. So we need to keep an eye on if we start going back up and building acceptance back around these levels. There's a good likelihood that we will take this level and go to the all-time high. So the immediate focus in the morning is on assessing continuation or lack of it to the late session move, which, as you might remember, ended up down here. We need to assess if this is gonna get continued or if the market is gonna balance or retrace this. A meaningful strength to the downside will see a continuation move, and probably the 2900 will be the likely destination. So that's our focus for the time being. But remember, anything can happen, especially after such a big move late in the session, because remember, odds are just odds. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.